So let's get ahead with 16th question. So this is regarding valuation of inventories. The closing stock of finished goods of a company amounted to 4,50,000. The following items were included at cost in the total. 100 coats which had cost 2,200 each and normally sold for 4,000 each. Owing to a defect in manufacture, their NRV was determined at 50% of their normal selling price. Shirts which had cost 50,000, their net realizable value at balance sheet date was 55,000. Commission at 10% on sales is payable to agents. What should the inventory value be according to AS2 after considering the two items? So this guy is asking you about whether you should consider cost or NRV here. Okay. So cost or NRV, whichever is low, is supposed to be considered. In the first case, let's see what is the total value. He says it is 100 coats. 100 into 2,200 gives you 22 lakhs, and NRV is 55%, 50% of the normal selling price. Okay, so 4,000 into 50% is how much? It is going to be 2,000. Okay, so it's going to be 100 into 2,000, which is 20 lakhs. That means you should consider only 20 lakhs instead of 22 lakhs. So now what is he saying in this 4,50,000, 2,200 is considered right now. So you should actually take NRV of 20 lakhs. Okay. So that is number one. Second, okay, 2 lakhs. All right. 2 lakh rupees is what you are supposed to consider. All right. And then in the second case, shirts which cost 50,000, their net realizable value at balance sheet date was 55,000. Commission at 10% on sales is payable to agents. So that means cost is 50,000, clear. NRV, if you see, it is 55,000 less cost to sell is 5,500. So if you deduct this, you have got 49,500. Right? So what do you take in this case? Hello? NRV is supposed to be taken. Okay. So in both the cases, you are supposed to take NRV rather than cost. Okay. Now, so what you are supposed to make an adjustment is, from this 4,50,000, you should deduct 20,000, number one, because NRV is 2 lakh rupees instead of 2.2 lakhs. And with respect to shirts, it is supposed to be considered 49,500 instead of 50,000 because you have a commission of 10% on sales, payable to agents. That's why. Okay. So final solution would be value given. You are supposed to show value given. Value given is 4,50,000 less cost of A 2 lakh rupees, 2,20,000 actually. Again less cost of B, which is 50,000. Add NRV of A, NRV of B. Both are supposed to be added at 2 lakh rupees and 49,500. So finally what you get is your value of closing stock, or you can mention it as corrected value of closing stock. How much does it come to?
4,29,500.
4,29,500. Thank you. Okay. So this is what you are supposed to do in this problem. Okay. So next. 17th question, please see. It is about AS10. RS Limited has acquired a heavy plant at a cost of 2 crores the estimated useful life is 10 years. At the end of second year, one of the major components, that is boiler, has become obsolete, which was acquired at price of 50 lakhs and requires replacement as further maintenance is uneconomical. The remainder of the plant is perfect and is expected to last for next 8 years. The cost of new boiler is 60 lakhs. Can the cost of the new boiler be recognized as an asset? And if so, what should be the carrying value of the plant at the end of the year? Now, what he is saying, let's see. What he is saying is, out of this entire heavy plant, what he has acquired for 2 crores, there are different parts, out of which one particular part has become obsolete in second year itself, and remaining plant is usable by him for next 8 years, but this particular boiler alone is going to be replaced with a new boiler. Okay, now if that be the case, you can assume that there are 2 parts in this 2 crores of investment. One is for 50 lakh rupees, second is for 1.5 crore what he has spent on other parts. This alone has become obsolete. This is perfectly fine and it is working, in which case you will continue to depreciate this at the same thing. Okay, now instead of this 50 lakhs worth of machine, he is going to buy a new machine. Now you need to check whether you are going to have future economic benefits because of the replacement. Of course, yes, I am going to have future economic benefits, because he clearly told that boiler became obsolete and requires replacement. Okay, as further maintenance is uneconomical. Okay, further maintenance is uneconomical. Now, by spending the 60 lakhs, you know you are going to earn more, or you are going to earn what you are right now earning, because right now with this existing boiler you cannot own, in which case you will have to change this machine, and that 60 lakhs can be added to the cost of the machine, no wrong. Now how do we present it in our books of accounts? He is saying the machine or the boiler got spoiled at the end of second year only. That means for the first 2 years you would have already depreciated it. Okay, so let's see what would be the depreciation for 50 lakhs. If it is 10 years useful life, 5 lakh rupees would be the depreciation for the first 2 years. The book value of this 50 lakhs would be 40 lakhs, and this 1.5 crore worth of remaining assets would be depreciated for 2 years, 15 lakhs each, and you would right now have 1.2 crore for this. Okay, that means book value at the end of year 2 is going to be 1.6 crore. From this you are supposed to deduct, which is nothing but 1.2 plus 40. Okay, 1.6 crore. From this you are supposed to deduct WDV of boiler. Okay, 0.4 crore. Add cost of new asset, which is 0.6 crore. And this is going to be your revised book value, which would be 1.8 crore. Okay, and then this is going to be written off to be depreciated. Over how many years will you depreciate this?
8 years, sir.
8 years, that's all. Okay, so this is your solution for this particular problem. Yeah. Yes, come on. I'm not able to hear you correctly. Konju loud. Kitta vechikittu please speaker. I mean like mic. Yes.
The boiler you explain, sir.
See, there are two boilers. One is obsolete. That means which I have already in my books of accounts. That since it has become obsolete, I'll have to remove it from my book value. I'm going to sell it off. I don't know what price I'm going to sell, but right now we are not concerned about the profit or loss what we made on sale. We are only concerned about how the new boiler is supposed to be incorporated into the books. Okay. So right now my existing boiler value is 40 lakhs. This 40 lakhs which I am going to deduct out of the current book value, okay, and add the new assets value into my balance sheet. That is what we have done. Is that clear? Am I right?
Yes, sir.
Okay.
Yes, sir.
Next. 18th question. A company had imported raw material worth 6 lakh USD on 5th January 22 when the exchange rate was 43 per dollar. The company had recorded transactions in the books at the above mentioned rate. The payment for the import transaction was made on 5th April 22 when the exchange rate was 47 per USD. However, on 31st March 22, the rate of exchange was 48 per USD. The company passed an entry on 31st March 22 adjusting the cost of raw material consumed for the difference between 47 and 43 per dollar. In the background of the relevant accounting standard, is the company's accounting treatment correct? You know directly that it is not correct. Why? Because once you pass the purchase entry, you cannot make corrections to it. All you can do is recognize profit or loss on your foreign exchange losses, increase and decrease in values. That's all. You cannot do a readjustment to the transaction which is already passed. Okay. Now, what you are supposed to do? Initially, when you entered into the transaction, the value is 43 into $600,000. Okay. That happened on 5th January. So, let me put it down here. So, on 5th January 22, on entering into the transaction, you are supposed to recognize 600,000 into 43. It is going to be how much, please? Someone calculate and tell me. Okay. 258 lakhs. Okay. On 31st March 22, it has become 48. That means there is difference between 43 and 48 to the tune of 5 rupees. So there is this basically a import. Okay, you are importing. That means you should pay money. So what would be the entry when you have entered into the transaction? Purchase account debit. To foreign vendor. It is 258 and 258. Now on 31st March 22, you are supposed to recognize the difference between 48 and 43 as a loss. Okay, but you cannot revisit your purchases. That's what I am saying. So in which case you will only increase your liability by debiting it to P&L. Okay, so how much would you debit? 5 into 6 lakhs. It's going to be 30 lakhs. Okay, so forex loss account debit to foreign vendor. It is 5 into 6 lakhs. So how did you get this 5? It is 48 minus 43. So please confirm whether it is 48 or not first. Okay. So the rate on 31st March was 48 per dollar. I am correct. Okay. And on settlement date, the rate has become 47 per dollar. Okay. Now on 5th of April 22, it has become 47 is what he is saying. That means it has fallen down from 48 to 47, which means I am going to pay 47 rupees on $6 lakh. Okay. So how am I going to recognize that? I am going to recognize it as foreign vendor account debit. How much already is there in my books of accounts? 258 plus this is 30 lakhs. So that means it is 288. Am I correct? Please correct me if I am wrong. Calculations.
Yes, sir.
Okay. 288 lakhs is what is there. To bank, I am going to pay only 6 lakh into 47 rupees, which comes to how much?
282, sir.
Forex gain. Yeah. So it is basically 282 lakhs and forex gain is 6 lakh rupees. Okay. So this is how you are supposed to calculate and show in your books of accounts the amount of gain and losses. So now how should you answer this in your examination? That's very, very important. How you are supposed to answer, I'll tell you, please see. You are supposed to say like this. He has mentioned that the company has passed an entry on 31st March adjusting cost of raw material consumed between 47 and 43 per USD. Now when he would have done this, he would have done it on 5th of April, which is absolutely wrong. Revisiting a transaction which is already recorded without any error is itself wrong. Okay. So you cannot revisit the same transaction and make corrections there. Instead, you should only pass a rectification entry, that too when you find a error in it. So right now there is no error in the transaction at all. You will not be able to rectify it. So on the outset, that correction of old entry itself is wrong. Okay. Second, with respect to recognition of gain or loss, as on 31st March, the loss is 30 lakhs, which is the difference between 48 and 43. Such loss has to be recognized in P&L and the credit is supposed to be given to the vendor or the payable. And later on in the next year, you are supposed to recognize a gain for 6 lakh rupees. That's all. Okay. So this is what you are supposed to convey there. With this, the answer is over. Next. Government grants. Please see. Samrat Limited has set up its business in a designated backward area which entitles the company for subsidy of 25% of the total investment from Government of India. The company has invested 80 crores in the eligible investment. Company is eligible for subsidy and has received 20 crores from government. The company wants to recognize the said subsidy as its income to improve the bottom line of the company. Do you approve the approach? Do you approve the action of the company in accordance with this standard? Actually, no. This is a direct institute material question. I don't think there is requirement to answer this repeatedly. To keep it very short, whenever there is a government grant received, you are supposed to show it only as a capital contribution and shown as part of your capital reserves. You cannot, you can never bring it into P&L in any year. When once you receive that government grant as part of capital contribution, you cannot show it as deferred income also. That is the very, very important aspect which you are supposed to mention. 2 points. Number 1, which you are supposed to mention is, it is supposed to be shown as capital reserve. Number 2, it cannot be recognized as P&L. No P&L. Number 3 is no recognition as deferred revenue also. Okay. So these are the points what you are supposed to mention. That's all. Is that clear? Can I go forward, please?
Yes, sir.
All right. Next. 13th question. Mother Mart Limited wants to reclassify its investments in accordance with AS 13. Decide the treatment to be given in each of the following cases, assuming that the market value has been determined in an arm's length transaction between knowledgeable and willing buyers. and sellers. A portion of current investments purchased for 25 lakhs to be reclassified as long-term investments as the company has decided to retain them. Okay. The market value as on the balance sheet date was 30 lakhs. The fair value of the investment on the date of transfer is same as the market value on the balance sheet date. Another portion of current investments purchased for 20 lakhs has been classified as long-term investments. The fair value of these investments as on the date of balance sheet was 12.5 lakhs. One portion of long-term investments no longer considered for holding purposes to be reclassified as current investment. The original cost of this was 15 lakhs but has been written down to 11 lakhs to recognize permanent decline as per AS 13. Now what is he talking about here? Whenever you alter your intention to hold, how do you recognize that impact is what the question is about. Okay. Yeah. So whenever you have a question where the investment thought, that is investment intention, is being changed, where you are moving it from current to non-current or non-current to current, in such case what you are supposed to see is when it moves from current investment to non-current, that means your intention is to hold it for long term. Okay. In such case what you are supposed to look at, what you are supposed to transfer is cost or fair value. Whichever is lower is supposed to be considered. Okay. Whereas when it comes to non-current to current, if you are moving from non-current to current, in such case you are supposed to check these two, cost or NRV, whichever is lower. Both are supposed to be checked on the date of transaction or on the date of reclassification. All right. So this is the basis for you. Now let us see what transactions have happened. Okay. A portion of current investment purchased for 25 lakhs. Now please see, from current investment he is going for long term. Okay. To be reclassified as long term. That means what are you supposed to take? Cost or fair value on the date of reclassification, as the company has decided to retain them. The market value as on the date of balance sheet was 30 lakhs. The fair value of the investment on the date of transfer is same as market value on the balance sheet date. Now what would you consider? Cost or fair value? What? We will go with cost only, because 25 lakhs is lower here. Okay. Next. Second, another portion of current investment purchased for 20 lakhs has been reclassified as long term. That means again here also from current to long term only. Here also you will check cost and fair value. Now the fair value of the investments on the date of balance sheet is 12.5 lakhs. So what will you consider?
12.5.
We will consider 12.5. What will you do with the remaining 7.5 lakhs? It will be charged off to P&L.
Transfer to P&L.
Okay. Next, one portion of long-term investment no longer considered for holding purpose to be reclassified as current. That means from long term you are moving it to current. The original cost is 15, but the written down value is 11 lakhs to recognize permanent decline. Now what would you do? In this case he did not tell you from non-current to current what you are supposed to look at. Cost and NRV. I think he has given you NRV, no? Okay, there is fall in value other than temporary. So it is because of permanent fall in value, he has written it down to 11 lakhs. So you are supposed to consider 11 lakhs only. Okay. So this is with respect to this particular part of the question. Now let's go to last question, 20th question regarding A16 borrowing cost. Harish Construction Company is constructing a huge building project consisting of 4 phases. It is expected that the full building will be constructed over several years, but phase 1 and phase 2 of the building will be started as soon as they are completed. Following is the details of the work done on different phases of the building during the current year. Cash expenditure is given, building purchased total expense, and then total expenditure of all phases is given, loan taken at 15% at the beginning of the year. During mid of the current year, phase 1 and phase 2 have been has become operational. Find out the total amount to be capitalized and to be expensed during the year. So this is the question. Now what are you supposed to do? You are supposed to see to what extent the construction is done during the year, and accordingly so much is supposed to be considered for your capitalization of interest costs. On a pro rata basis you are supposed to do. Now what is the total interest for you? First of all, loan taken at the beginning of the year is 15%, okay, on 200 crores or 200 lakhs. So it's going to be how much? 15% for 200 lakhs, which comes to
30 lakhs, sir.
30 lakhs, okay. So 30 lakhs is your total interest cost. So out of the 30 lakhs of interest cost, how much should you capitalize is only the question, okay. Now let us see how much he has utilized in the entire building, how much he has utilized for phase 1 and phase 2. By mid of the year itself he has stated that it has become operational, okay. So let us see how much he has spent on that. So 34 lakhs is spent on phase 1 and 64 lakhs is spent on phase 2, okay. So first of all, on phase 1 10 lakhs is cash expenditure, building purchased is 24 lakhs and 34 lakhs, okay. So now out of this 34 and 64, cash expenditure is only what you are supposed to look at, because building purchased is different. Building purchase means what? It is actually bought out as it is. You are supposed to consider borrowing cost only to the extent of the expenses incurred for getting the asset ready, okay. So in this case 24 lakhs and 34 lakhs you will not be able to consider, okay. So that is number 1. Next, your total cost of the project is how much? It is 34 plus 64 plus 55 plus 68, okay. So all put together it is going to be given there 221, okay. So out of 221, if that is the total cost of your project, you are incurring cash expenditure only to the extent of 30 lakhs out of this 200 lakhs. Am I making sense?
Yes, sir.
Okay. So now please look at this carefully. By the end of phase 2, you have incurred how much? As we have earlier mentioned, 34 plus 64, which is 98 lakhs is utilized by me, okay. 98 lakhs is utilized by me out of the total cost of the project of 221. On the same proportion, I am supposed to recognize. Yes or no? Hello?
Yes, sir.
Now, so what you are supposed to do is 200 lakhs into 15% is your total interest cost for the entire full year, okay, which is 30 lakhs is what we have identified. So out of this 30 lakhs, to the extent of 98 lakhs it is completed, okay. To the extent of 98 lakhs it is completed in the first half. So only to that extent I can capitalize, and remaining I am going to you will do it based on proportionate base in the rest of the year, okay. So 30 lakhs into 98 divided by 221 will give me how much? Can you please calculate and tell me?
13.3, sir.
So this is with respect to interest on these two phases only, okay. 13 point how much?
3, sir.
13.3 lakhs is the amount of interest on these two. Okay, that means out of 30 lakhs, 13.3 is what you will be able to consider. Okay, so interest on the remaining phases for the third and fourth phases will be what you are not going to recognize now. Okay, so how much are you going to capitalize in this? Hello, how much are you going to capitalize in this?
Sir, 13.3 into 40 by 98, sir.
Excellent. So this 13.3, you cannot say completely it is for the asset, because you have spent some money for purchase of direct assets. Okay, so this with respect of amount which is used for building purchase cannot be considered for your capitalization. Why? Because that will not be considered as a qualifying asset. What is considered as qualifying asset? Whatever cost I am incurring for furtherance of the asset or creation of asset, only to that extent I can consider. Now the cost which is incurred for creation of qualifying asset is only 10 lakhs and 30 lakhs. That's why out of this 13.3 lakh, I can consider only 40 divided by 98. Okay, 40 divided by 98 as cost of interest cost which can be capitalized. Can you please tell me how much it is going to be?
5.43.
Okay, 5.43 lakhs is what you are going to capitalize, and the rest what will you do?
Expend to P&L.
Enappa?
P&L charge பண்ணுவோம், sir.
Yeah. Now, so 5.43 is what you are saying. Please note here, this 13.3 is basically for one full year. Do you agree with me or not? 30 lakhs is the total interest for one full year. Out of that, monies which are used for phase 1, phase 2 is 13.3 lakhs. Okay, that is the interest for monies used on phase 1 and phase 2. Now what you need to be even more cautious is, he clearly told that during mid of the year, phase 1 and phase 2 have become operational. Operational means that is no more a qualifying asset, it became a qualifying asset. It is ready for use. The moment it is ready for use, you should cease capitalizing the borrowing cost. Am I making sense? Hello?
Yes, sir.
So in which case, you cannot directly take 5.43. You cannot directly take 5.43. First, out of this 13.3 lakh, you should see how much is for the first 6 months. How much is it going to be? Hello? 6 lakh something.
6.65.
Okay. 6.65 lakhs. Okay. So only one 6.65 lakhs is what you can consider. In that also, you should capitalize only to the tune of 40 by 98. How much is it going to be? 6.65 into 40 by 98.
2.71, sir.
Okay, it is going to be 2.71.
71.
All right, 2.21, 2.71 is to be capitalized.
Yes, sir.
All right. Now, regarding the remaining two phases, what are you going to do?
Charge to P&L, sir.
Charge to P&L.
Yes, sir.
Why?
Operation ஆயிடுச்சுல்ல.
Huh? What became
Operational.
What became operational? Phase 1 and phase 2 or phase 3, phase 4?
Phase 1, phase 2, sir.
Then regarding phase 3, phase 4, I am asking, how much will you capitalize is the question. Hello? How much will you capitalize is the question.
1 minute, sir. 30 lakh into.
Sir, there is no second thought about it. Please note, with respect to second phase 3 and phase 4, you can capitalize the full value. Entire difference between 30 lakhs and 13.3, it's going to be 16.7 lakh. This can be completely capitalized. Yes or no?
சார் அந்த பில்டிங்ல இன்வெஸ்ட் பண்ணிருக்காங்களா சார், அந்த குவாலிஃபைங் அசெட் கிடையாது பில்டிங், அதனால அதை செப்பரேட் பண்ணி தான் சார் மீதி.
Sorry?
சார் அங்கே பில்டிங் பர்ச்சேஸ் பண்ணியிருக்காங்களா சார், அங்கே 30 lakh and 38 lakhsக்கு அது வந்து குவாலிஃபைங் அசெட் கிடையாதுல்ல, அதனால பாரி காஸ்ட் இன்கர் பண்ணக்கூடாதுல்ல.
Okay, yes, agreed. So only to the extent whatever this 25 and 30 are there, to this extent you are supposed to capitalize. Agreed, yeah. Okay, so out of the 16.7, you are supposed to see how much is towards this phase 3 and phase 4 and then take the value accordingly. Is that clear?
Yes sir.
Alright, so with this all problems are done. My suggestion to you, as I always mention in the classrooms, you should mandatorily cover 5 RTPs and 5 sized answers and only then go for your examination. With this particular RTP, if you see, we have spent not more than 4.5 hours total or maximum 5 hours. So this time is sufficient for you to cover one RTP. So like this, you should spend time to finish off every RTP. Here I am doing it in front of you, for your comfort. One RTP if you have done like this, others if you read the question, you should be able to have in your mind, you should be able to visualize how you are going to see the answer, okay, how the answer flows. So if you are able to do that, it's done. You need not completely solve problem like how I am doing. Maybe you can do it as a rough work in your solutions and then move ahead with the next problem. So that is how I would suggest you to do the RTP works. Okay, so please finish off all RTPs as I have mentioned, 5 RTP plus 5 sized answers and MTPs also. So that would be a good revision for you in this last minute. Thank you.